Good afternoon, everyone. We'll be with you shortly. We're just emptying the lobby and bringing people into the main webinar room. Okay, so let's get started. Some people will continue to arrive, but in the meantime, welcome to the second in the series of webinars produced jointly by the British Chambers, Chamber Customs and Department of International Trade, with our guests here today who I'll introduce shortly. My name's Liam Smith, I'm Director of Trade at the BCC, and welcome you to this meeting. I'm also joined by Steve Lamprell from HMRC, who you'll be hearing from shortly, by Paul Wrighting, my colleague who's an expert in rules of origin and leads our network in the service delivery that we have across the UK, by Gary Lee from the Department of International Trade and the Export Support Service, and also, first of all, you're going to be hearing from Jacob Thundil from Cocofina, who's going to share his experience in dealing with rules of origin in the kind of post-Brexit period and continuing to do so. Jacob is going to join us for a short period at the beginning and then he'll leave us. We would encourage you to post your questions in the Q&A function, slightly different from the chat function. In the chat function, we'll share links with you and information for you to take away. In the Q&A function, that's where you should post any questions you have about anything you've heard today or anything that you want to clarify in relation to rules of origin. And my colleagues and I will be monitoring that, curating your questions, and the last half hour of our hour we'll aim to dedicate to answering those questions for you. So without further ado, welcome Jacob from Cocofina. If you want to share your slides and share your experience with everyone who's on the call today, that would be marvellous. Thank you.
Can you see my slides now?
I can see them, Jacob. We just don't have them in full screen yet.
Yeah, okay. Is that better now?
That's you on full screen. Thank you, Jacob.
Thank you. Thank you for the kind introduction. I'll give you a quick overview of who I am so that you know where I'm coming from. So I founded Cocofina in 2004, most recently Sauzier, and then a third company making a patented fully dissolving tea product where you don't need a tea bag to enjoy a cup of tea. So from 2004, I started from my kitchen table and now enjoyed in 30 countries. And you can see some logos and countries that we export to. So if I move to the next slide, this is my second company. We pronounce it as Sauzier. Sauzier is someone who makes sauces in French. So we use sustainable Scottish seaweed to produce soy sauce alternatives. So I think an exporting win for us would be if we end up exporting soy sauce to somewhere in Asia. That's my thing that I'm trying to tick the box for. So you know, those are the products that we produce. So if I move straight to the rules of origin, I want to offer you some words of comfort. When I started, I did not know anything about rules of origin. I did not know what documents were required for exporting. And I would compare running a food business, especially an organic certified food business, to juggling. You know, when you master three, then you get another ball thrown in. So you're just constantly juggling. So I don't think you need to worry if you feel a little bit anxious about what do I need to do for exporting. So as you can see on my slide, all my products are organic. We produce in the UK, we produce in the EU, we produce in the Asia. We export to 30 countries, including the EU. Some countries are a bit more complicated than others. And I'm more used to dealing with the simple scenarios. And when it gets complicated, I reach out to DIT, reach out to the chamber because I'm a customer of the chamber and they help me make export declarations and also even import declarations. And also sometimes rely on my accountant for VAT related questions. So in the early days, one of my experiences for that is in my early days, we were bootstrapping and we ended up relying on ourselves to design a label in Swedish, and we were supposed to launch in Sweden. And what we didn't appreciate was best before date needed to be printed in Swedish. And I learned a lesson there. We didn't know that. We thought a date was a date because it's a number. But obviously, in whatever country you're in Europe, you need to have that in the European language. So we ended up printing those labels, and then our launch got delayed. So I would definitely recommend, if things get complicated, you should definitely get an expert involved. Most of the time, the advice that I get isn't expensive or even paid for, because when I use the chamber to do customs declarations, they're well versed to advise me. So I rely on them. And it's also very good to err on the side of caution, because what you don't want to do is to store up tax liabilities for the future, because if you're not doing it properly, then you can end up with future tax liabilities. So when it comes to rules of origin, my thought process goes like this. I always ask, whether it's a supplier or myself, I would always ask, where were the goods produced or grown? Where is it coming from? So for example, if I'm importing a product that's grown in Sri Lanka, produced in Sri Lanka, and coming from Sri Lanka, it's a very simple scenario, and I feel quite confident to deal with it, because I know, for example, Sri Lanka is a GSP plus country, so I can get, if it's not, let's say if it's not sugar that I'm importing and it's not a controlled substance, then I can get GSP plus on it, and that means that I don't pay any duty for that import. But for every situation, there's complications. Like, what if there's 2 ingredients and it's not a single ingredient? What if 60% of that second ingredient didn't originate in Sri Lanka? And then what if they're not adding any value to the product? So there's few of those considerations. And as you start dealing with these rules, you'll get more and more used to knowing and dealing with those simple situations. When it's a difficult situation, I would definitely reach out to DIT or reach out to London Chamber. So that's how my thought process works. So it's important to understand the rules, because a lot of the times, a lot of people start to shy away from exporting to certain countries because it requires certain paperwork, or it seems to be complicated. Because the main challenge for us as exporters should be getting the sales, because the other things are things that you can solve. Because what you don't want to be is like, you don't want to get scared away by the paperwork and the documentation. I would definitely avoid stored up liabilities, because when it's complicated, I would definitely get advice from the experts. When you've established that you need to pay duty, I would try and figure out if there's a way to pay less duty, because there are paperwork that you can present to either reduce your duty liability, or even sometimes not pay any duty at all. You inspire confidence in your customers when you show that you know how the exporting process works and what paperwork you need. So that's definitely helped us. And over time, we've started to build up a library of, here's an example of what documents are going to be given to you. So at least they know if there's something wrong with it, they can highlight it already. Then exporting increases reach. It helps you to deal with economic cycles like we are dealing with now. It helps to extend product life cycle, because something that's very fashionable here may just be starting to become in fashion in another country. And then rely on the experts. I can't stress on this enough. And last but not least, it helps our country. And it's definitely one way that you can help. So that's my slot done. If you have any questions, please feel free.
Thank you very much. I'm sure that that prompt to get on the Q&A and ask some questions will be there for our audience, and I encourage them to use that Q&A function to do that. So you said in your presentation, Jacob, if you have to pay duty, try and pay less. I think Steve in HMRC might say if you have to pay duty, pay the correct duty. So I'll turn to you, Steve, as a segue into that, and thank Jacob for his contribution. Some interesting points he covered there. So Steve, over to you.
Good afternoon, folks. I'll just do a quick introduction. My name is Steve Lamprell. I've been working in customs for far too many years that I care to mention, and I've certainly been working in Origin for a few years, and certainly covered the time when the TCA, the agreement with the EU, was being drafted and came into force. Now, I suppose Jacob's already covered quite a bit of stuff, so thank you, Jacob. But I'll just sort of go over a few quick things. So, what are rules of origin? So rules of origin determine where goods actually originate. This does not necessarily mean where they've been shipped from, but where they've been produced or manufactured. And as such, origin is the economic nationality of the goods traded in commerce. The origin of the goods, together with their tariff classification and value, determine the applicable customs tariff, so the amount of duty that I'm going to be interested in. For customs matters, we need to make a distinction between the two types of origin, notably non-preferential origin and preferential origin. So non-preferential origin is used for things like trade statistics and the application of trade defence measures such as anti-dumping duty, and therefore, in that regard, falls outside of the TCA, the agreement that we have with the EU. The TCA really concerns itself with preferential origin. So those rules that are within that agreement that you need to meet in order to gain preference if you're exporting your goods from the UK to the EU. And if you are exporting from the UK to any other country that the UK has an agreement with, you would have to consult the rules within that particular agreement in order to see whether or not your goods originate. And as I say, Jacob already touched on that earlier on. So how do goods gain origin? So goods gain preferential status if they are wholly obtained, for example, in the UK, so for example, a potato, or they're produced from goods or materials that are wholly originating. This is one way. So if you are a farmer, then your potatoes would be wholly originating if you wanted to export them. If you were a crisp manufacturer, then you could manufacture your crisps from potatoes that were produced by a UK farmer, and those crisps would be wholly originating. If you were the crisp manufacturer, then you would really be looking for a supplier's declaration, which I might touch upon later on, from the farmer, just to prove that the potatoes that you are using in the manufacture of your crisps are in fact wholly originating, and therefore if we were to do a check, then we would see that your crisps were wholly originating and therefore qualify for preference when you exported them. If you import goods or materials from other countries, for example, China, that you use in the manufacture of your product, and you want to export your product to the EU, then they can only qualify for the finished product can only qualify for preferential status if the Chinese material is further processed or incorporated with UK material, or produced to a level that it meets the rule of origin. So you'd have to look at the specific rule of origin for that particular product to see what you would have to do to any non-originating material in order for that particular product, once you've finished producing it, to qualify for preference. And those rules could involve a change of tariff heading. So you import something under Chapter 20, and the product that you're exporting is under Chapter 85 or something like that. The rules could also impose a limit on the amount of non-originating material that can be used in the production of a product, or increase or require an increase in the value. Now, as far as the TCA is concerned, EU material, so imports that you've taken from the EU, you can accumulate with that material in the UK. By accumulation, I mean you can use that in the production of your product here in the UK, and so long as that processing on the EU material goes beyond insufficient, which is so we're talking about a lower bar to the actual rules of origin. So long as it goes beyond insufficient, then the finished product, you can count that EU product as UK. And therefore it counts as UK material if you were to re-export or export the finished product to the EU. As I say, it's only a system of bilateral accumulation that we have with the EU. So you can't import goods from elsewhere and use this lower bar, this beyond insufficient, in order to get origin if you're going to export your goods to the EU. Also, under the TCA, processing carried out in the EU can be on non-originating material can be accumulated with if those goods are imported into the UK. In that circumstance, what you're looking for really in that circumstance is a supplier's declaration from the EU supplier, which will set out exactly what processing has been carried out on that particular product. So it wouldn't qualify for preference on import, but you can see how much processing has been carried out on that product in the EU, and you can use that processing. That can count towards the overall preferential status of the UK product. And again, the supplier's declaration would be required if you were to accumulate with processed goods. So, I mean, that is how you can gain preference. You can lose preference. So, if you were to if you import something into the UK, say for example from the EU, then and you bring that into free circulation, you then can't re-export that to the EU under preference because it's been released into free circulation. And the same would apply if you were to import stuff. For example, if you import goods from China, I mean, these wouldn't actually gain preference, but I mean, perhaps if I change the example, if you import goods from Norway or somewhere like that where we have a preferential agreement, if you import those and they're brought into free circulation, then they lose their preferential status under the EU's agreement with Norway. So you need to be conscious of the fact that preferential status is basically a wrapper, and once you bring the goods into free circulation, they lose that wrapper. And unless you actually process the goods to give them UK origin, then unfortunately they won't have origin.
That, Steve, is quite a common. Sorry, am I unmuted? Yeah. So if you're hearing me, that's quite a common question that we get, and I know you do too, where people don't have the understanding of that wrapper effect. It's a nice way to put it, that once the wrapper is off, you can't put the wrapper back on. And I think Paul might come to some of those points as well. But anyway, carry on.
Okay, I'll be quick because I'm conscious of the time. I mean, as far as I say, that the TCA with the EU is concerned, there's several documents or means of proving preference that you need to be aware of. If you are the exporter and you know that your goods meet the origin rules and you have the necessary suppliers declarations, which you may require depending on your particular product. The example I gave of the crisp manufacturer using homegrown potatoes would be an example where if you were the crisp manufacturer, you'd want a supplier's declaration from the farmer that you would need to examine the rule of origin to see whether or not you would require those. If they did, then what you can do is if you, with your ORI number, you can make out a statement on origin on a document that describes the goods that you're exporting. And those documents would go with the goods or be sent over to your importer, and the importer in the EU could use that document in order to claim preference. The other way is if you're importing, or in fact, either way, but if you are the importer, then if you're importing goods from the EU and you know that the goods you're importing from the EU do meet the rules of origin, so you've got detailed knowledge as to the manufacturing process, the raw materials that went into it, all the necessary values, depending on what that rule of origin is, and you have evidence that you have all that knowledge, then you can use importers' knowledge. So that's the other means. I'll quickly just say that we are on our online tariff now. We do have a rules of origin tool, which if you put in the goods and the country of origin that you're interested in, and go onto the RU tab, that should give you the rules of origin that are in place. And further on down, there's a further tool which gives you some questions you can answer, and it will help you determine whether or not your goods actually meet with the rules of origin.
And it's very good, much improved on where it was, but it's worth saying that it is really just dealing with bilateral trade, isn't it? I don't mean to say that that's a downside, just that sometimes we get those kind of complicated questions, Steve, about, you know, I'm buying, the goods are coming from one country to the UK, but actually the origin is another country. The wrapper has fallen off at that point, typically, unless substantial processing has taken place. But so you should be aware that it is bilateral. Goods originating in one country coming to the UK, not goods originating in a separate country and coming to the UK from a third country. Anyway, thank you for that, Steve. That's very comprehensive and really useful and talks to the point. And I should say that fundamentally the reason for these webinars is to encourage people to use the rules of origin and to claim preferences, because that makes our finished goods export more competitive and in terms of the input costs of imported materials, and also it makes us more competitive to the buyers in other countries. So thanks, Steve. Turning to you, Paul, you hear from our colleagues across the Chamber network and the issues that they face day and daily around preference and non-preference. Do you want to talk a bit about that? And maybe also, I think it'd be helpful for people if you introduce the concept of accumulation and what you think about that, because I've just thrown that on you, just to respond to a quick question about further explaining bilateral. Bilateral means from one country to another, rather than multilateral from multiple countries to us. So it's just one-way traffic from one locus to another. But maybe, I know, Paul, you had a question just this week about, I think, what are those little green things that they're in sauces. I'll come to it. Anyway, I know what it was about.
Capers.
Capers, that's what they're called. I lost the word capers there for a moment, but capers that you might want to introduce. So over to you. Thanks, Paul.
Thanks, Liam. Hi, everyone. Yeah, I mean, the rules of origin, although they are complicated to get a grip with initially, once you've worked out how to work out the rules of origin in something like the UK-EU trade agreement, actually then when you move on to other agreements, you will have a good understanding. So although the rules aren't necessarily the same, the basics are whether it needs a changed commodity code, does it need, is it a value-based change that needs to occur, what are the minimum processes? So you'll understand the terms. So once you've mastered one trade agreement, you'll be in a good position to deal with any of them. To pick up on accumulation, there are different sorts of accumulation. So previously, when we were a member of the EU, for instance, and we were dealing with, say, Mexico, then we could import a product into the UK from France, and then we could send it to Mexico and claim preference because we were part of the larger group. So there was full accumulation. Now, if you import the goods from France and you don't process them in a way and send them to Mexico, they wouldn't qualify because they're not of UK origin. And that is despite the fact that the EU and Mexico still have a trade agreement. The trade agreement is not, it's not a triangular thing. So just because the EU and Mexico have a trade agreement and the UK and Mexico have a trade agreement doesn't mean that we in the UK can claim preference when sending stuff to Mexico. It still needs to be UK origin. I've had this question this morning regarding Ecuador, and the exporter was very frustrated because they said, but the EU and the Ecuador have a trade agreement, and that's true. So if the goods had been sent from France, they would have qualified. But because they've moved to the UK, as Steve referred, when they moved to the UK, they lost their preferential origin. So where you ship the goods from can be important. Chambers are obviously in a great place to advise you on all this. The staff a lot of the staff are trained in this. They know what they're talking about, and they can issue with the various documents you might need to claim preference. Now, under the TCA, you're most likely to use invoice declaration or to receive an invoice declaration from your supplier in Europe, and you can rely on that to claim preference. However, do be aware that if the supplier makes a mistake with the origin, it is still you who is liable in the UK. So make sure to do some due diligence when, just don't, if somebody in Germany tells you that the goods are of EU origin, make sure that you actually know they're of EU origin as far as reasonably possible. Don't just, do some due diligence, make sure that you do that, because unfortunately HMRC are not going to go to Germany and sue the company in Germany. They're going to come after you in the UK if it turns out the origin is wrong. And we are seeing an upturn in compliance requests both to and from the different customs authorities. So the UK is starting go out to companies in Germany. We came across one from Poland the other week where they've asked the Polish authorities to confirm that the origin statement given was correct. And again, the other way around, EU customs authorities ask HMRC to confirm the origin of UK goods from time to time as well. So compliance really is important, and I thought that was really interesting, that what was said earlier about building up a liability, because if they check the origin once and find out it's wrong, they will just assume the origin was wrong on everything that was imported from that company and charge you accordingly. And even though you may eventually prove that the origins were correct, it will take you a lot of time and energy to do that. So always better to comply in the first instance. Capers, yes, it was whether capers qualify for origin. They were mixed in with another product. So did it change the origin of the original product? It was olives and capers together in some sort of sauce. Yeah, I mean, you'd have to look at the value of the value of the capers compared to the value of the olives and decide whether it changed it. And in the trade agreement, there will be a section that tells you what by value what the value needs to be of originating product in order to claim preference. And if the capers exceeded that value, they'd lose their preferential origin.
Yeah, can you unmute me? Yeah. So excuse us, we're working off two laptops. My speakers have gone awry during this webinar somehow. I thought that was an interesting one on the capers, because the first question was, can the capers claim preference if they've come from one country to another country and then come to the UK? The answer is no. The second question then is, if they're processed into and combined with another product, can the final finished goods be claiming preference? And the answer to that is maybe. As Paul explained, it depends on what the value of each component part is, and also being confident. And I think the other thing about sometimes take the Polish example there that Paul referred to, is that the interesting aspect of that was the Polish company supplying the UK company were presumed to be supplying Polish chicken. In fact, it turned out to be chicken from many other countries, because the Polish supplier's contract with their supplier didn't specify it needed to be EU origin chicken. So, at this point of us leaving the single market, fundamentally has changed things for a lot of companies. So it is worth retrospectively working back. And I should say the webinar that we had last week, where we had Kerry Group presenting, it's worth looking back at their section of that webinar and looking at what they have done as a company to track and trace every element of what they do in order that they're compliant with the claims that they're making for preferential tariffs. So I mentioned that too. Thank you for that, Paul. That's excellent. If I could just remind everyone that Q&A is open. We have some interesting questions in there. We can take a few more. So if you have some, please get them into that section, and we'll come to them shortly. I'm now going to turn to Gary Lee from the DIT and Export Support Service. And Gary, you're going to signpost people to some information that they can access. So tell us about that.
That's right. Thanks, Liam. Hello, everybody. So I come from DIT's Export Support Service, and our main role is basically to help all exporters from the UK about how to get their goods out of the country, basically. And I'm just going to drop a link into the chat that leads to our online inquiry website. And it's a very, very straightforward process. You go to that link, you fill in a bit of information about yourself, tell us a little bit about what you want to be doing and the nature of your company. All the information remain confidential, and our teams will help to signpost you to either the right guidance or the right teams within DIT who can offer you further assistance. And one of the key things that we've been helping a lot of businesses on has been actually rules of origin, which, as we all know, and that we heard today, it can be quite complex. And we have been working with a couple of government departments to try to improve the kind of guidance and the accessibility of the guidance that we currently have as well. So after this webinar, we will be circulating a resource pack of sorts, which can point you towards some of these newer tools that can hopefully make the kind of different self-assessment stages a little bit easier, as well as various links to other government resources that hopefully you'll find useful as well. So that's it from me. Do drop us a line, and we're very happy to hear from you all. Thanks, Liam.
Yeah, that's good. So, the great thing is that you've got multiple places that you can go to. Jacob talked about going to DIT, also going to London Chamber. Other chambers, of course, do exist across the country. There are 60 locations across the UK where you can get advice on preferential rules of origin. And indeed, the opportunity there is the chamber helping you to either produce a preferential certificate of origin or indeed a non-preference certificate, where sometimes buyers of goods from the UK want those non-preference certificates because they intend to re-export those goods to another market, and they take comfort in that certificate existing. So thank you for that, Gary. Lots of advice available, and some people looking for it right now and today. I'm going to start with a question from Paul Turner, who asks a question actually we get regularly into chambers for sure, but I'll pose it. Under the UK-EU Trade and Cooperation Agreement, is Norway part of the EU? If I buy product in Norway, brought it to the UK to further process and then to export to the EU, would Norway be considered a third country or part of the EU for the TCA? I think the question here is, there's further processing of the goods. Well, I think Paul will come to you to talk about the principles of it, and maybe to Steve to talk about processing and to what extent typically goods would need to be processed to be able to have UK origin. So Paul, how would you comment on that?
Yeah, I mean, I'd need to check exactly, because obviously the processes vary. What qualifies as a qualifying process varies depending on the product.
But
so
the principle of Norway being part of the, is Norway?
It's not part of the. No, it's part of the EEA, so it's separate from the EU. It's not part of the single market. So generally, if you imported goods from Norway into the UK, you couldn't send them back to the EU. Well, you wouldn't anyway, because they're not UK origin. Whether you've processed them enough then becomes quite a difficult question. You know, does smoking generally, if you've just preserved the fish, so if if you've imported whole salmon from Norway into the UK and then just cut them into fillets, that's not going to change the origin of the good. They're still going to be Norwegian salmon. Then you can look at, if you've actually then cooked it and prepared it into a dish, maybe mixed it with rice or turned it into sushi, then at that point you may have changed stuff. You may have done enough processing for it to claim UK origin, but the rules for that would be contained in the TCA. So you need to look at the minimum processing rules that apply to that product. And there are, minimum processing is not as straightforward. Some things are fairly obvious. You import wood from Sweden, you turn that timber into a chair, and then you export the chair. Well, the chair is obviously still made of Swedish wood, but it's actually considered UK origin because it's been processed, the commodity code has changed, the value has increased, etc. So there would be no doubt about something like that. When it becomes to minimal processing, such as, is smoking fish enough to change the origin, then it gets a bit more complicated, and you have to look in detail at the procedures and read the corresponding guidance. One of the examples DIT always give is if you import clay from China and make a cup out of it, then you've changed the origin. The clay is obviously still Chinese, but you've changed the nature of the product. It's gone from clay to a cup. However, if you import ready-made cups and then say just print a logo onto the side of that cup, then you haven't changed the product. It's still a cup, and therefore just printing on something like a cup won't change the origin of the goods.
Yeah, and so I guess the answer for Paul, and I know he asked a supplementary question that Steve has answered directly about, he wants to be able to say the origins of the UK with non-simple processing. Well, it depends, as you say, what the minimum processing requirements are of the TCA. But in the kind of the original question, Norway, UK, EU. It's the Norway UK bit that's distinct from the UK EU part.
Yes.
In terms of two movements. There are two movements, and as Paul said before, you cannot triangulate those things. Anything you would add, Steve? I think you're still on the call, Steve.
Yeah, I'm still here, Liam. No, obviously, yeah, this is something that we are aware of, unfortunately. But yes, it's if you import something from Norway, and it's the same really. If an EU supplier imports something from Norway, unless it is processed to meet the rules of origin in the TCA, then you cannot move those goods between the EU and UK, depending on which route they've come, under preference. So you can't, although I think you'll find within our agreement with Norway, and this is where it gets slightly more complicated, with our agreement with Norway, I think we do have an arrangement whereby you can accumulate with EU product and process it to us under minimal processing. That processing I was referring to earlier on, and accumulate that particular product with UK material, produce good, and send it over to Norway, and you can accumulate that way. But no, you can't do it the other way. If you import goods from Norway and you bring them into free circulation and you don't process those goods in accordance with the TCA
minimum requirement,
then you cannot claim preference on those goods. They've lost their wrapper.
They've lost their wrapper. I'm going to keep using that phrase. I think it's a really nice way to I think you should patent that, Steve, before too long. Otherwise, I'm going to. So thanks for that, and that's really useful. Irina Purcell also asked about the standard waiting time for obtaining an advanced origin ruling from HMRC. Steve has said it's the time limit is at 120 days. However, and this is our experience, they're usually processed quicker than that. Clearly depends on how complex the ask is, but typically you should be getting it quicker than the 120 days going by current standards. Charlotte Boast has asked, is it in best practice to request statement certificate of origin for importing any product, depending on which duty rates apply and trade agreements, so that proof is documented for any audit request moving forward? Paul was nodding vigorously there, and we would say to you, absolutely make sure that you have as much evidence of your right to claim a preferential tariff in the UK, because as Paul stated earlier, they won't go after your supplier. HMRC is only ever going to come after you, and they're going to presume that everything that's happened previously may also have been due to pay duty. And it's, you know, that's HMRC doing the job that we ask them to do as citizens of the country, is to make sure that the correct duties are paid at the border. So not only get those statements and certificates of origin for importing, but try and be certain that that you can stand them up. And certainly you talk about certificates of origin, the standards applied by chambers in the United Kingdom are exactly the same standards that are applied in many countries across the globe who meet the standards, who operate at the International Chamber of Commerce standards and regulations on the issuance of certificates of origin. So they do carry weight when issued from a Chamber of Commerce, and it can be quite useful in backing up a supplier's invoice statement or long-term supplier declaration. Charmaine D'Souza asked, please explain the importance of REX numbers and preference statements, and does the value limit matter to the claim? Paul, you replied to that. Do you want to just, because not everybody can see the Q&A, I don't think.
Okay, yeah, so the REX number is actually a European number. We did have them briefly, well, before we left before we Brexited, but the UK doesn't use REX numbers. However, under the TCA, if you're importing goods from France or Germany, they should put an invoice declaration on there regarding the origin, and as part of that invoice declaration, they should quote their REX number. So all of your suppliers in Europe, in the EU, should have a REX number, and they should quote that when they're making the invoice declaration.
Very good. Thank you very much. Jackie Reeves asked, can you ship from, say, Italy to Ireland, but have the supplier invoice the UK and the UK invoice the sale to the Irish customer? And so this is about, you know, the payment of goods, where in order to avoid bringing goods into the UK customs territory and into free circulation, they ship directly and act as almost like an agent for that. Steve, can I come to you on that? I'm sure you've been asked this many times. I'm not sure it's entirely in your wheelhouse, but it probably is.
I think you'll have to go through that question again. I can't read the question in the Q&A. So what was the issue again?
The principle is, so you sell goods to someone in Ireland. You're in the UK company. You sell goods to someone in Ireland. You ship them directly from the manufacturer in Italy, but you invoice the customer in Ireland from the UK. So you're selling the goods ostensibly as a UK trader, but you're not handling the goods. You're simply moving them from Italy to Ireland and doing the invoicing part from the UK.
So that's so we're talking from Italy to the Republic of Ireland.
Yes.
So that's just an internal movement.
Exactly, and the point here is that the services, in effect, you've sold a service of arranging that goods movement from one country to another, and yeah, you can invoice from the UK. I guess you need to speak to a VAT specialist about how you handle the VAT associated with that if you're charging the Irish customer VAT, which you typically wouldn't be. But anyway, you probably need some tax advice on that. But in terms of origin, it's irrelevant. They're going from Italy to the Republic of Ireland. and that's within the EU customs territory. If they're going to Northern Ireland, then again, it's, you know, you would need to handle the customs and duty and the like if they were landing there. But the principle of invoicing from here is not a problem.
No, I mean, it's referred to as triangulation. So if you want to Google it, that's triangulation VAT, and you'll get a whole plethora of advice. But yeah, best speak to an expert, and you'll probably end up needing a VAT number in Southern Ireland, the Republic of Ireland, in order to be able to do that without incurring VAT.
Yeah, exactly. Madeline Piera, just to go to, this is about the product specific rule under Chapter 3, where it says production in which all materials of used are wholly obtained. And what Madeline is saying is, it sounds like to gain preferential treatment, the goods need to be exclusively produced in the UK without incorporating materials from any other country at all. Is that correct? Well, it's not, is it?
It can be, actually. I mean,
Oh, sorry, it's wholly obtained. If they're wholly obtained.
Yeah, it's wholly obtained. So yeah, you may, under that particular rule for those particular products, then obviously food is usually has some of the more stricter rules of origin. So it's quite possible that actually if you're making something in the UK to export as UK, it would need to be wholly obtained. So
yeah,
all the products would need to be of UK origin.
To go back to our capers, you know,
yes.
if you had capers wholly obtained in the UK, but olives wholly obtained in Greece, and you imported them from Greece and incorporated them into a combined product and put a tomato sauce around them, then it would depend. Again, you would need to use the processing rule or the calculation rule to see whether you met the requirements of the trade agreement with the country that you were exporting to. Isn't that right?
Yeah, again, the rules. So for food, quite often you can't incorporate other countries' foods into the product and still claim it as UK. But believe it or not, I think if you read the rules, it varies between types of food as well. So it's quite specific.
Yeah. This is an interesting question. Again, one that we hear fairly regularly from Suhail. A question about losing or gaining preferential origin. If I am based in the EU, in Spain, and I import goods from China and put them in free circulation in the EU, then I export these goods to the UK. As the EU exporter, am I allowed to declare my goods for export as EU origin goods? Steve, that's one right for you.
Yeah, no, it's the
it's a short, very short answer, which Paul gave as well. Absolutely no. Going back to Steve's wrapper issue, now you could say, well, the wrapper didn't come off because the wrapper was never on. The goods came from China. There is no trade agreement with China or preferences from China, so they didn't gain preference when they arrived in Spain. But again, if the goods fundamentally are the same when they arrived, if the goods arriving in Spain was a cotton shirt and it left Spain as a cotton shirt, it's still a cotton shirt and its origin is still China. It doesn't change, so no preference can be claimed on those goods. No preferences would apply. And if you have been importing goods in that basis, you may want to get some advice about what you do about that. But fundamentally, you would be liable to pay duties if you've claimed them tariff-free in the past. You'd be liable to pay them in the UK. So thanks for that from you. The question from Alan Swan is about the EU access to markets tool for non-EU trade that exists there. Does the UK have any plans in making an equivalent tool? And helpfully, Alan puts on a link there. And does the UK have multilateral agreements with non-EU countries? Well, I think the first question, Steve, I don't know if you're, I mean, the tariff tool is very good. It deals with all countries. It's not quite the same as that market access tool. But is there any plans either at DIT or HMRC to enhance the tools that we have? Are you able to say anything about that? Either Gary or yourself, Steve?
Well, I'll come in quickly from the customs side. I mean, as you you said, Liam, I mean that the rule tool on the online tariff is useful. It's only recently been launched, but it is something that we're interested to get feedback on, and to develop further as time goes by. So yes, ideally we will and do want to improve that particular facility. Certainly the access to markets tool was something that we were looking at, because that's something obviously like we'd like to replicate. And as I say, you know, the UK version at the moment does ask questions a bit like the access to market tool. So yes, we would like to develop that further. So happy to, if people want to, after they've used that tool, you know, to come back with feedback.
Yeah, and there is, you know, at the bottom of the screen on pretty much all gov.uk pages, there is an opportunity to provide feedback. Or if you think there's something wrong with the page, you can provide feedback. And I have to say that I find that system very responsive. At any time that I have provided it, people are interested in knowing what you think of the content. Thanks for that. Quick one here. This is about, you know, using the elements, the cost of each element to reach the threshold for origin. Andrea Stevens is asking, can you include design and development as part of the UK origin? I guess this talks to IP, licensing, those kinds of intangible elements in calculating and rolling that up into a calculation. Paul, do you want to say something about that? Because I know that Chambers will regularly be helping businesses to understand how to reach the origin threshold.
Yeah, so not directly is the answer. So if you've got research and development costs, it's really included in the profit element of your product. So it's the profit that you're allowed to, the profit is considered originating. So where you've increased the value of the goods, and that profit incorporates your research and development, etc.
Yeah, so the short answer is no in terms of the reaching the threshold, but because it's considered to be there. But what other elements apart from say raw material components could be allowable in that calculation?
Things like overhead, so electricity, cost of, you know, the buildings. So the normal overhead you would include in the cost of the product, and obviously labour, as long as it's done in the UK, then they all count the labour costs. That's all considered as originating. Yeah, along with the profit.
But the other elements would be part of the profit. So hopefully, Andrea, that answers that question for you. But do feel free to take advice, and you've been offered many routes to getting more detailed advice about your product. I mean, we're answering these questions without ordinarily knowing what product we're talking about and whether specific rules may apply in particular agreements. So it's general information we're providing here. More detailed information can be sought from DIT, from chambers across the country, and indeed by asking the questions of HMRC as well. Joanne, I smell a little bit because it's kind of so here's the question, and you'll understand why I was smiling. If the UK and the EU have the same trade deal with a third country, would then the rules of origin apply? Again, this is kind of around triangulation, isn't it, Steve, and cumulation, and actually, when is the trade deal ever exactly the same? Well, I guess when it's rollover, but trade deals often vary, don't they, after they go beyond the rollover phase? Steve, do you want to say anything about that?
Well, yeah, although arguably it's perhaps more of a Dick question, but but yes, they can change, certainly with regards to things like proof of origin. Some of the continuity agreements which were rolled over, you know, we're starting to diverge from the EU agreements on those sort of elements. There might very well have been some changes in the actual rules of origin themselves, but on the whole, they are the same. However, I mean, what it doesn't mean is that, as I say, if you've got if the EU and the UK has an agreement with the same country, you don't get that same flow of movement as you would if there was a sort of like diagonal accumulation, or you could treat those goods as UK or what have you. The continuity agreements have been drafted in such a way, as I was saying before, where the UK should be able to accumulate with EU product and then export that to perhaps the UK's trading partner under the UK trade agreement. But even then, there's elements of that which, as you know, are quite fraught with pitfalls and stuff like that, especially where the rules of origin have differed, and then you've got those proofs of origin as well.
Yeah, I'd just add that the main catch is that all the trade agreements have a direct shipment clause in them. So the goods have to move directly from one country to another country to claim preference. So that's generally what's the problem. So if the goods have moved from France to the UK and then to a third country where both countries have a trade agreement, they're no longer a direct shipment. So it doesn't count. That's why it loses its origin.
It does. It loses it. And I think it's an important point to remember about preferential origin is that it's a use once only tool. When the wrapper's off, the wrapper's off. You cannot rewrap the goods and then claim origin on a second occasion. And I don't think there's a trade agreement in the world that allows that, that would allow that to happen. I'm going to finish up with a question which is around retaining origin by, I think it's Alan that refers to goods lose the wrapper unless they move under customs control, i.e. a bond or a customs warehouse. He said it would be helpful to know if so basically, I think this question is really around the principle of customs warehousing and whether the goods at what point the goods lose their wrapper. So I know that we have advised a few companies more recently on the establishment of customs warehousing for this very reason, in order that the goods can arrive from third countries or indeed other locations in the European Union, and then be sold back into the European Union under preference. Maybe come to Steve on that. Where would goods continue to retain their wrapper under customs control, and at what point would the wrapper be lost?
Right. I guess this runs on from what Paul was just saying about the direct transport, because this is one of those circumstances where you've got this direct transport from A to B, but or rather from A to C, but it stops off at B. Essentially, what we're talking about there is where, yes, as you said, they remain under customs control, so they're in a customs control. It might be on the quay side or something like that within the port, which customs controlled, or they've been moved into a customs warehouse where they have not been no declaration has been made to bring the goods into free circulation, and then really what we're talking about there is if the original exporter wanted to split those goods. So some of the goods wanted to, if the goods have been imported into the UK, been placed into a UK warehouse, customs warehouse, if that exporter then wanted to split some of that consignment and send it on to the EU, then that operation could be carried out under under customs control, on behalf of the exporter, and then really what would be needed in order to claim preference in the EU would be the appropriate proof of origin raised by the original exporter.
That's it. And so goods that have entered that warehouse or that control from the European Union could re-enter the European Union without payment of duty, but those coming from third countries would be subject to duty, but only once, having not entered the UK customs territory, rather than what often happens right now is goods from China pay duty into the UK and pay duty again into the European Union. So it's a way of reducing the customs liability, not always being able to confer preference, but sometimes can. Anyway, we're out of time, folks. Thank you very much to Steve, to Gary, to Paul, and earlier to Jacob, who had to leave us for another meeting, and most importantly to you for joining us today. We got to many of your questions. I'm sorry we didn't get to others. Feel free to ask them directly to us through the Chamber Customs website, or emailing us directly, info@chambercustoms.co.uk. We'll try to come back to you if we can. But thank you for attending today. It's recorded, it will be available to you, and my colleague Heidi will send you that link in due course. Goodbye.